Grab just released their latest quarterly figures and the stock is down 10% after hours, which means the stock is back to where it was at the end of last week before the huge jump that happened at the start of this week, which in my opinion happened because the algo just picked up all of the chatter on all of the social media platforms. I might be crazy, but I mean, how else do you explain such a move? On one day, it was up close to 10-12% at one point, finished the day up 8% or so. But this huge jump here came out of nowhere. And if you've been on social media throughout the weekend and especially on Sunday, you know that a lot of folks did start to talk about Grab out of nowhere. So I did a video yesterday or 2 days ago talk about why everybody's been talking about Grab, what's Grab, what they've been doing, the growth, the expectations, etc., etc. Is it overhyped or not, to temper the expectations? So hopefully you did not chase the hype, you did not chase all of the momentum, and if you wanted to open a position, well, now it just got a little bit cheaper, plus we've got more information. So if you enjoy this type of videos, hit all the buttons, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment, hit the top 10 best stocks to buy now, or go to fool.com/gotchainvestor. Thank you very much. So let's start off with a major overview here. What exactly happened? Why is the stock down 10%? Well, first up, they did beat on revenue, but then there were more misses than beats, especially when it comes to guidance. So annual revenue guidance missed by 0.7%. EBITDA guide also missed by 7%. Now for the quarter, they missed GMV estimate by 1.2%, met EBITDA estimate and beat EBITDA guide by 2.6%. They also missed $9 million EBIT estimate by $7 million. So again, small misses that, well, do take the stock down 10%, but remember the stock was already up 12% throughout the week, so we're back to prices not seen since a couple of days ago. Now, we also have some estimates for deliveries, mobility, and financial services. That's the different segments that you have inside of Grab. So for deliveries, they also missed a tiny bit. Revenue came in at $407 million. Estimate number was $408 million. For mobility, a bigger miss here. Revenue of $282 million. The expected number was $295 million. Then for financial services, revenue was $74 million. The expected number was $80 million. So definitely not an incredible quarter, a blow out of the water type of quarter. Definitely not. But is it a thesis breaker? Also, definitely not. And by the way, I'm no shareholder of Grab, so I'm not trying to pump anything here. I'm a shareholder of Uber, and Uber has a 12.5% stake in Grab. So if Grab does well, Uber does well, and I do well. So, oh well. I'll go over two comments from management. So first up, the CEO here, fourth quarter was our strongest quarter ever. We finished 2024 with on-demand GMV growth accelerating to 20% year over year. And as we continue to generate profitability at scale, we have more users on our platform than ever, and our unique platform advantages place us in a strong position to continue this growth momentum into 2025 and to deepen user engagement across our ecosystem. As for the CFO, we outperformed our revenue guidance for 2024 while demonstrating our ability to scale the platform profitably as we delivered our record full-year group adjusted EBITDA of $313 million and adjusted free cash flow of $136 million. These are important milestones for us as we look to maintain our growth momentum and cash generation capabilities while remaining disciplined in making strategic investments to strengthen our ecosystem and enhancing shareholder value. Now, the highlights are as follows. Revenue increased 17% year over year. On-demand GMV increased 20% year over year, an acceleration quarter over quarter. Group adjusted EBITDA came in at $97 million and adjusted free cash flow of $61 million. That's up $60 million year over year. Now, with regards to free cash flow specifically, of course, we've seen adjusted free cash flow, but with regards to free cash flow, that was $200 million for the quarter or $704 million for the full year. Now, where do you get an impact? Well, you get an impact because of the deposits from customers in the banking business. So you have to reduce that, which is why you're seeing such a big difference from free cash flow to adjusted free cash flow. If you've seen the numbers of free cash flow differ by quite a lot, this is basically the reason. Now diving a little bit deeper here, there are a couple of things we should keep an eye on. So one, of course, the group MTU, which is monthly transacting users, that's in millions of users, that increased 17% year over year to 43.9 million. And as you will see, that's also a small reacceleration quarter over quarter. The loan portfolio also increased very, very quickly, 64% year over year to $536 million. They've also broken down the three business segments. So as we've seen, deliveries, $407 million, an increase of 13% year over year. GMV increased 19% year over year. And the segment adjusted EBITDA increased just 1% year over year to $57 million. If we look at mobility, revenue there increased 19% year over year. GMV increased 23%. And adjusted EBITDA for that segment increased 19% as well. If we look at financial services, that's one that's also increasing quite quickly, growing quite quickly, up 38% year over year. But of course, the number is much smaller than the other two segments. The loan portfolio increased 64%. And here, this is still an unprofitable segment of the business, but improving, right? Improving year over year. Quarter over quarter was flat-ish, a bit down. And so zooming out a little bit, comparing the recent quarter here to the others, clearly this was a very, very good quarter for the company. This is revenue for mobility, financial services, and deliveries. Then if you look at the adjusted EBITDA one, as I've said, financial services, an improvement year over year, quarter over quarter, flat-ish to down. As for deliveries, we're up a little bit quarter over quarter, not by much, $2 million. And then for mobility, we're up by $4 million. Looking at the MTUs, the monthly transacting users, you can see 43.9 million, that continues to go up. And as I've said in the previous video, you can see that back here in 2023, growth was decelerating, basically staying flat to 7%, 7.5% or so. Then we started to reaccelerate. In the June quarter, we see that it had topped at 17.2% year-over-year growth. But of course, that year-over-year growth looks very, very good. But if you look at the same quarter the year prior, that was the lowest point, 7.1%. But then last, 2 quarters ago now, we can see that growth started to decelerate a tiny bit, 16.4%. But now we see a small reacceleration of 17%, and that's on top of a stronger quarter, same quarter last year. But of course, the year-over-year comparisons are definitely not getting any easier. And then, of course, the last thing here is outlook for 2025. Now, of course, since this is the start of the year, this is basically them setting the bar, whether you think it's high or low. I think it's not that high, right? They missed on the estimated number. So this sets them up, in my opinion, to basically beat and raise in the next couple of quarters if they do see and feel that they have some momentum. So revenue should increase between 19 to 22% year over year, still respectable growth, right? Then with regards to a growth adjusted EBITDA, that should grow between 41 to 50% year over year. I would expect that number, the difference here, to become smaller and smaller after each and every quarter. And don't forget that Grab operates in Southeast Asia, and Southeast Asia, well, we've seen in the past video back in Q3 2024, real GDP growth versus the prior period. We can see that in the big markets such as Singapore, Thailand, and Vietnam, well, the recovery has been quite good in the last quarter. Of course, I'm still waiting to get the Q4 figures. And then in Indonesia, Malaysia, and Philippines, which also aren't small countries, but here you can see that GDP growth is not as fast as the other ones, although Indonesia still doing quite okay. Philippines quite okay, although 2022 was a better year for them compared to 2023. And then 2024 is probably going to be a bit of the same. And so right now, looking at the stock, we can see that, well, on the weekly, the stock was overbought before the earnings report came out. Now it does seem like the stock after hours sits just above that 20-day moving average. The 200-day one sits closer to $4 at $4.18. Now, of course, tomorrow is a new day. Let's see what happens. Stock might open lower and then recover throughout the day. They might say something during the earnings call that might flip the stock price after hours. If that happens, I'll pin it in the comment section. But all in all, if you want to open a position or build up your position, again, I don't think this is a thesis breaking quarter. Steady grower. Don't expect, just because you're hearing a lot of retail investors on X talk about that, don't expect this to be the next 10x, 5x, whatever by the end of the year. So all in all, that's about it. On Thursday, we have a lot of companies to go through. Alibaba, Mercado Libre, Block, Nebius, plenty of earnings reports for Thursday. And of course, the live stream with Jose, always lunchtime, 12:30 p.m. Eastern. So stay tuned for that. If you enjoy this type of videos, hit all the buttons and I'll see you all in the next one. Bye-bye.